What's up, traders? This is Matt with Conservative Trades coming at you once again with another episode of The Trader's Mind. And in today's episode, this episode has kind of come by way of request of one of the regulars in our live stream chat. And he was saying early this week, he just kind of typed a little message across the chat and he said, you ought to do an episode of The Trader's Mind titled Thinking in Probabilities. And I got to thinking about that, because there is a difference. There is a difference in taking trades based on probabilities, based on likelihood scenarios, and taking trades based on possibilities. And so that might be what I actually title this episode. I don't know. I'll know when I get done with it, okay? But I am thinking about titling this episode Probabilities versus Possibilities, or Possibilities versus Probabilities. But, and by the way, for those of you who are new to the channel, these episodes that I launch on The Trader's Mind are episodes that talk more towards the aspect of trader psychology. Okay, and we talk about this so many times on the channel. A lot of the regulars are probably getting sick of hearing me talk about this, but I really feel like I owe it to the new listeners and those of you who are aspiring day traders, or you're just now getting into day trading, and you need to know that trader psychology is a massive, massive part of day trading. You can get all the education and knowledge that you want. You can do all the practicing in a trading simulator for months on end. You can do all that, all you want. But if you don't have a good grip on trader psychology, the likelihood of you being a successful day trader is slim to none. Okay? Might I remind you that there are approximately 90%, some people even say as much as 93, some people even say as much as 95% of day traders that lose money, that don't make money. So if on average 93% of day traders lose money, this means that there's only really a 7% success rate among the day trading community. And for you to be profitable and consistently profitable, you've got to have a good handle on trader psychology. Okay, because the education is great, the knowledge is great. Yes, the research, the studying, knowing the fundamentals and how to do technical analysis, and yes, practicing in a simulator, all of that is critical also. It is very critical, it's very key, and it should be done before anybody embarks on a day trading journey. But none of that will mean anything if you don't know how to apply it in the most critical points of your trading career. And if you can't get control of your emotions, if you can't stay mentally disciplined, you're not going to be successful. Okay? Or there's very, very, very little hope in you being successful. Okay? And so that's why I do these episodes. But today's episode, once again, we're going to be talking about possibilities versus probabilities. Okay? And let me just give you a little scenario here about the difference between possibilities or probabilities. Let's say that you've got a flight that's going to take off. Okay? And you're running a little behind, but you're talking to the wifey and you're saying, if we leave now, if we go right now, we should make the flight. So you're using words like should, or even will. We will make the flight. If we go right now, we will make the flight. Now, maybe there's another couple caveats in there, as long as we don't get stuck in some kind of, traffic, if there's a big wreck and, we end up sitting still in 2 mile backed up traffic on the highway, other than that, barring any kind of, crazy situation that could keep us, we should be able to make that flight. Okay, so we know you're pushing it, right? We know you're pushing it, but you're weighing the probabilities. You know how long it takes to get to the airport. You're thinking about how long it's going to take to get parked and to get checked in and make it through, TSA and all that stuff. And you're thinking to yourself, if we go right now, by all intents and purposes, we should make it. Okay, so you take a shot. You load up the car and you take the shot. Okay, that's very different than you being in a position where you literally should have left like 30 minutes ago. Like you're probably not going to make it. The probabilities are actually heavily weighed against you. But now, maybe out of a spirit of hopefulness, I don't know, maybe now you start thinking in possibilities. You start thinking about what's possible. Okay? So you're thinking to yourself, and maybe you're talking it over with the wifey, or you wifeys, maybe you're talking it over with the husband or whatever, and you're saying, hey, there's flight delays all the time. maybe this flight is going to get delayed as well. I can count on both hands how many times I've been early to a flight and then ended up being delayed. And we were standing around for an extra 30 minutes. I mean, technically, like if all the right things lined up, it's possible that we could still make it, even though when you're pulling up and parking, the plane's probably going to be taking off. But you're still thinking to yourself, hey, it's possible. Hey, let's be a little hopeful here. Yeah, we're probably going to miss that flight, but you know what? Hey, it is possible. So that's the difference. And instead of using words like should, like if we go now, we should make the flight, you're now starting to say, well, we could make the flight. You see the difference? Two totally different ways of looking at things. And this can be applied to trading as well. And as a matter of fact, I'm going to show you two trades that I took earlier this week. One was a winning trade and one was a losing trade. And I'm going to tell you how I traded these completely differently, because one of them was traded more on probabilities and the other one was traded in thinking about the possibilities. Okay, so right here, as you can see, mRNA. On May 27th, at the opening bell, it had gapped down. And I had said earlier in pre-market, I actually, and you can go back, I post these live streams every day to the channel. We stream live on the channel Monday through Friday, and beginning roughly around 9 a.m. when I go through the pre-market and I tell everybody what my plans are. Okay, so you can go back, you can see this, you can check what I'm telling you right now. But I said that, we've got a gap right here that if the stock ends up getting bought up to this point, I'm going to want to start a position at around $57. And the reason I said I wanted to start a position is because I saw great potential for it to come all the way up to $60 to maybe even $61. And if you look on the daily chart, that's right where the 20 and the 9 EMA were starting to meet up. And I just saw that there would be a heavy enough resistance there that if we could build a position all the way up to that point, maybe a 200 share position, we would start sizing in around 50 shares at about $57. And maybe every dollar I would add another 50 shares all the way up to maybe $61, right? Build maybe a 250 share position. And then once we start getting a pullback, I would get out, and that was the plan. And I saw a lot of great likelihood with that, because even on the daily chart, there were previous daily levels where those had been critical areas of support. So this 60 to 61 level, and especially with $60 being kind of again, this is where trader psychology comes in. That's a strong psychological hold number. Okay, so even if it broke up through it, it might not be able to hold it, and you would expect some kind of a pullback. Why? Because I've seen this thing, this type of move many times over. Okay, and so there's a lot of signals, there's a lot of things that I'm looking at with the chart, there's a lot of confirming signals that could tell me, or that would tell me that this could be a very potentially strong move. And obviously if it were to continue to move against me, well then I would have to get out and I would have to take a loss. Okay, but there was a likely enough scenario for me to say, hey, I'll at least start averaging in 50 shares when it hits $57. Well, you can see here, later through the day, what happens? Later through the day, let's pull it over. It starts getting up to this $57 level, and an actual alert went off. Again, you can see this was all done live. It's been documented. It's on the live stream. So right when it hit up around $57, I went ahead and got in with 50 shares. Okay, now I didn't add at $58, but I actually did add at $59. I added another 50 shares. So now I had a 100 share average. Okay, and look at this. It started meeting resistance. A lot of times stocks will end up blowing up through what you think is going to be resistance, but then they can't hold, and then it starts to sell off. And that's exactly what happened. And we got a good move on those 100 shares back down to the downside, okay? And I took profit, and I made a nice little chunk of change. It wasn't a huge trade. I didn't get to build my position all the way up, but I just knew that as it gets up to these levels here, from 57 to 60, there was going to be a great chance of a pullback, okay? And I knew this. I based it not on what I thought could possibly happen. I wasn't thinking in possibilities. I was looking at the chart patterns. I was watching price action. I was watching volume. I was even basing it on what I know about how mRNA trades. I've traded mRNA many times before. And when you day trade long enough, you kind of get the feel of how certain stocks trade. I was looking at daily levels. I was watching moving averages. This was a very well constructed trade idea based on strong probabilities, from knowing what I know about technical analysis and knowing what I know about chart patterns and price action among certain stocks. Okay, so this was a very solid, well educated move, or well educated decision, and it worked out. Okay, it worked out, and I was able to profit on mRNA. Now, in contrast, there was another stock that I traded that I lost out on, and I traded it on Zscaler. Okay, is the name of the stock, or is the name of the company, Zscaler. So Zscaler had actually, if you look here on the 5-minute, it had actually gapped all the way up here, right? And in pre-market, this doesn't show pre-market data, but in pre-market, this was up to, I think it was somewhere around the $92, $93 levels or something like that. And it started, it had gone up in pre-market, and then came back, and it went up and tested it and couldn't get back above it in pre-market. So it came back and it started knocking on the door to the $90 mark. And again, that $90 level, that's a psychological whole number. It's important to know these things, guys. Okay. And I'll even break this down to the 1-minute chart. So I can, show you, more kind of what I was thinking. And let's see, where are we at? The one frustrating thing about this is in pre-market, and again, you can go back and watch. This was on yesterday's video, May 29th. When I was in pre-market and doing the pre-market analysis, it was very close to the opening bell. It was like 9:25, and I said, I feel like I should just take just a small 50 shares right here. I said, I really feel like this is about to get crushed through that $90 level. And a lot of times you'll see those moves in pre-market before the market opens up. But I actually missed it, and we all watched it happen. I was like, man, and it dropped all the way down here. And, or excuse me, I think it dropped all the way down to, it was around $87 in pre-market. And so I missed that move. So when the market opened back up, and again, I was basing this a little on fundamentals, but there was one thing I was concerned about with ZS, and that is that this had already hit all-time highs, and there was no previous area of resistance. And I often tell people, you have to be very, very, very careful about shorting stocks with no previous areas of resistance. But I said to myself, and I just kind of had, I had dollar signs in my eyes. I thought to myself, this could come crushing down all the way to $80. It could do a retest all the way down to $80. This was kind of the level that I was looking at right here. And then I thought, hey, and if this isn't enough of a level to hold, it could even come down into the 70s, right? So, it was a little mouth-watering. And I was thinking to myself, man, if this comes out and just continues to flush, I mean, I could just jump in 100 shares and get a good quick flush down through these levels, maybe piece out, 25 shares at a time or 50 shares at a time and just wait, and that 100 shares could go a really long way. But this stock was hitting at all-time highs. There was no previous area of resistance, and it kept getting bought up. It would go down, and then it would get bought up. It would get bought up all the way to roughly $88, and then it would go down. You could see, it opened up down here, and then it would go up and test $88, and then came down, and then pushed back up to $88, and then came down. And I saw this happening. These were lower highs forming, But I kept trying. I kept taking 100 shares and then stopping out when it jumped up to 88, and I'd take another 100 shares and stop out when it got up to 88. So, and then finally, it broke through 88, and I got out. Okay, so, I assess the risk, obviously, because that's a big part of it, and that's kind of the next thing that we're going to get to here. That's one of the biggest things that I want to talk about before we wrap this up. Even though everything else was telling me this is probably going to go up, the probabilities are more for this going up. Now, could it get rejected off of 88 again, and then everybody just decide, okay, man, maybe it's not going up. Maybe we should just dump. And then, and could there have been a dump way down to $80? Sure. Yes, that could have happened. Okay. That could have happened. But at this point, that was just thinking in possibilities. I was thinking, yeah, it could possibly go back down there. It's forming higher lows on the 1-minute. It keeps wanting to break through $88. There's a lot of buy volume. Every time it gets sold off, the bulls push it back up. It's really not likely that this is going to have a sell-off. It's more likely that it's going to end up getting bought up. And look what happened. It got bought up all the way up to these levels. And as a matter of fact, if you just go through the rest of the day, it just continued to get bought up more and more and more. I think it got bought up well over $96. Yeah, so it made it up. It made it up there and just kind of teetered around there for the rest of the day. But that's the difference, guys. That's the difference in thinking in probabilities and possibilities. And I think that whenever we go to make a trade, here's the thing. I'm not going to say that you should never trade in possibilities. Okay. But again, that's where you got to assess the risk. And that's the other part that I'm going to talk about here. But I will say this, that as professional traders, if we're serious about making money and we're serious about doing this well, we need to be trading in probabilities. We need to, based on fundamental analysis, technical analysis, we need to make a strong determination on the greatest possible likelihood, the most probable scenario of where a stock is going to go. And that's the trade idea that we should go with. We don't need to just be throwing money at the wind, or throwing money into the market. Now, we've all made that mistake, and sometimes it's tempting. Sometimes it's tempting, not to just, take a roll of the dice, because, you see that there could be a lot of room for a stock to move to the downside, or if you're long biased, you see a lot of room that it could move to the upside. And so, you want to get in, and sometimes you get a little emotional about it, and sometimes you get a little greedy and you start getting FOMO. For those of you who are new to trading, FOMO is an acronym. It means fear of missing out. And sometimes you just throw your money at it, you just pick up a bunch of shares and hope that, that the sky's the limit, right? But when you trade that way, more times than not, you'll find that you're gonna have very little success. Okay, and I think that that's actually how a lot of day traders end up blowing their accounts or just blowing their day trading careers altogether. Okay, so you may need to make a very strong determination in your mind that if you step into the world of day trading, you need to be willing to think in probabilities. Think more in probabilities. And if you see chart patterns, in setups that, look like, yeah, it's possible it might go in this direction. If that's how you're thinking, then you don't even need to be in that trade. Why would you take that trade? Now, it's another thing, if you're up on the day and you're doing really well and, you want to take a stab at a stock and, you set a good, you set a tight stop or something like that. I'm not saying that we don't ever not trade in possibilities. If you've made enough good trades throughout the day by thinking in probabilities to justify that maybe taking a trade, if you've made enough good, really solid trades and you're up enough on the day and you're doing really well and you're overall a profitable trader and you've proved that you're a profitable trader, then sure, yeah. I get it. Sometimes you want to take a shot at some stocks. Sometimes there's points of consolidations where the pattern's tightening up and it's really hard to tell whether it's going to go to the upside or to the downside. So yeah, I get it. Sometimes you just want to take a stab at it, but that brings me to the final point here, and I've talked about it several times how I want to get into this and how this is kind of how I want to wrap things up, and that is talking about risk. Talking about risk. Now, let's say you and your friends are on top of a building, right? And let's say you're in a downtown area somewhere where the rooftops of the buildings are relatively close together. Some buildings are, only, 5-10 feet apart. Some buildings are more like 15-20 feet apart, right? And say you're jumping from building to building top, right? Now, I'll tell you right now, that this is something that I probably would not do. Maybe I would have done it when I was much younger, but I would not do that now. Okay, even if the building was only five feet apart. I mean, we know that most people are going to be able to jump a 5-foot gap, right? It's very likely. It's more probable that you're going to be able to clear that 5-foot gap. You're probably going to jump. You're probably going to be safe. You're probably going to be fine. You're probably going to make it onto the other rooftop of that other building, right? But then say you've been jumping these rooftop buildings all day, these short little 5-10 foot gap rooftops, but then say you get to one that's like 15 feet, right? And you guys are kind of looking at each other and your friends are like, I don't know, man. And then, but you're like, man, I got this, man. Come on, man. I can jump 15 feet. Come on. Are you sure? I mean, I'm pretty sure. And then your friends are looking at this, and the more you look at it, the further away that building looks. And you're getting nervous now. Your legs are a little shaky, and you're starting to think to yourself, I mean, it's possible. It's possible we can make that. Well, at that point, you've got to start assessing the risk. And before you make that jump, you're going to start assessing the risk. By assessing the risk, you're going to look over the building. You're going to say, okay, well, we're about 80 feet up or 50 feet up or whatever. I don't know, man. We're like 5 stories up. If you miss, you could fall to your death. even if you're only a couple stories up, you're at least you can break a leg or something. But let's just say you're 50 feet up, you're 5 stories up, and you're assessing it. And it's like, well, it's possible you can make the jump, but if you miss, you're going to fall to your desk or you fall to your death. Is it worth the risk? Is the possibility of that jump worth you risking everything? And this is something, believe it or not, that I have seen day traders do time and time again. I mean, people have really loaded up into some of these low float, real volatile, low float, small cap stocks. And they've used all their buying power to buy up thousands and thousands of shares of this stuff, only to see it start dropping and they get caught in a halt going down and they end up blowing their accounts. Yes, it's possible that this is going to be the next low float play that goes to the moon, right? Yes, it's possible that this low float stock could go from, $3 to $10 and you're going to make a ton of money. You're going to be rich. But can you even really afford to take that many shares to begin with? Can you really afford to be wrong? People have literally committed career suicide in day trading because of doing stuff just like that. So that's the other part of it. Does it really justify the risk? Now, again, say you've taken a lot of trades and you're up $1,000 on a day and then on the day, and then you see some kind of tightening pattern, some consolidation on the stock, and it's really hard to tell whether this stock is going to end up dumping or there's going to be a new breakout to the upside. And you say to yourself, well, it's a tightening pattern. I could take 1,000 shares and I'll just have a 10-cent stop. I'm up $1,000 on the day. If I, or even a 20-cent stop. If I lose $200, fine. Because if this ends up going up, I mean, we got another $1 to $2 to where it can move. I mean, we could make another $1,000 on the day. Okay, sure, yes, you're trading more on the possibility of what the stock could do there, but you've earned the right. You've earned the right at this point. Anyway, I hope you guys enjoyed today's episode of The Trader's Mind. Let me know down in the comments what some of your takeaways are from today's episode. And also, if there's something that I might have missed, or if there's another point that you have to add to this that could add value to what we're talking about here today, let me know down in the comments. And if you're new to the channel, consider subscribing. Again, we do trade live here on the channel Monday through Friday, beginning roughly around 9 a.m. We'd love to have you guys. All right, y'all. Have a great rest of the weekend, and we'll see you in the chat on Monday. Take care.